Hi, good morning, everyone. Welcome to this live show. And yes, we are getting started right now. Today, I have a very special guest in this show called the One Good Trade Live Show. If you guys can see and hear me, you can see my screen as well, guys. Just type a GM for good morning. I think some of you have already joined us live. All right. Just type a GM for good morning. All right. Help us to like and share as well. Help us like and share as well before we get started in today's show called One Good Trades Live Show. All right, let's see who is here today. Hi, good morning as well. Hi, we have ABC. Good morning to Joey, Bervin, and Z. Hi, ABC. So Bervin and Z is not with me today. This is not our usual Friday weekly AMAS session. All right, so that's where we kind of like cover the stocks that you guys are asking about. That's on Friday. But today, I have a very special guest with me today. All right, Jamie from Macquarie, whereby it's a little bit different, right? As the name of this show goes, right? It's one good trade. So I'm going to share with you guys one top stock that you could put in your watch list. All right. And Jamie will then come then on to add a little bit more on how you could potentially, right, get a higher return, right, on this particular stock. Right. So welcome. Good morning as well. Hi, good morning. Edwin, hi, ABC as well. Hi, John, Ivan, good to see you as well. Good morning, guys. Welcome. So would it be okay, guys, if you could just help us to like and share? Let's wait for a few more people to just join us. Just help us to like and share, hit the heart button. If you have not yet subscribed to my YouTube channel, we are live on Facebook as well. Just go to hit the follow, subscribe button so that, when we go live, you will be alerted as well. All right, so let's see who is here joining us. Let's see more and more people are slowly coming in. Hi, good morning as well. Ray, Hokit, hi, good to see you here as well. Okay, so let's get started, guys. Let's get started. As I say, right, today, all right, is Wednesday. So today is a little bit different. I think some of you might have joined us, me and my team, Bervin and Z, on our weekly Friday Ask Me Any Stocks session. That's on Friday, all right? So we're still having it on Friday, not to worry. But today, it's a bit different, right? I'm going to share with you one of the top stock. And not only that, I have a special guest with me, Jamie from Macquarie, all right, who actually will come in later to share on how you can use warrants to potentially magnify your return, And that's exactly what I will share with you, right? So, Jamie, welcome. But maybe I'll just pass on the mic to Jamie just to say a little bit of today's session. Jamie, go ahead.
Thank you, Joey. Hi, everyone. Good morning. Good to see you again. If you're joining us for the first time, hopefully today's session will be really fruitful and at some point profitable for you. And I say that because we do this show almost every month. And the last session or last live show that we did was on 6th of May, where Joey covered HKEX. And obviously that stock is trading at new record highs today, this week. So obviously, I guess that idea panned out well, Joey. Congratulations again. So just wondering, if you could take us through via a recap on what you covered on HKEX for those who missed out on 6th of May. And then quickly, I could then share about how the warrant that we talk about on 6th of May also panned out with HKEX's move.
Definitely. All right. So perhaps you could go ahead to cover SGX later, and I'll pass on the mic to Jamie. All right. You just share a little bit on how the warrants for SGX did, right? That was covered previously in May. So what happens, guys? Now, if you kind of like you're joining us the first time, right? Me and Jamie will go on a live show every about a month or so, right? Just to add a little bit of value to give you guys a stock idea. It could be a Singapore stock, it could be a Hong Kong stock, all right? But not only that, right? More importantly, how Jamie will also give you guys an idea on how you could actually increase your ROI, all right, without buying the underlying stock by buying what we call the warrants, right? So very quickly, let me just go ahead to talk about SGX, but just a quick disclaimer, the standard disclaimer that we share, whatever that's being shared in today's session, right, it's just for education purpose only, right? So it's really not to ask you to buy or sell anything, all right? So please do your own homework, your own due diligence, all right? Okay, so let's get started. Let me just go ahead to share my screen. All right, and let's talk about maybe SGX very quickly. So I've on my screen right here, SGX. I think it was a stock that we covered somewhere around May in the previous One Good Trade live. I think it dipped a little bit somewhere over here. All right, kind of dipped a little bit, and then we kind of like caught for it then. So let me go ahead to what we call analyze this stock right now. So you can see for SGX, right, one of the reasons why we like it is that because for SGX, Singapore Exchange, right, it has been in a very strong longer term uptrend, right? Since like I would say last year, I would say since August, look at this, right? Last year, August, we were pretty much consolidating. I mean, look at the red and the blue line. It was a bit boring, I would say, from beginning of last year all the way to August. But somewhere around August, all right, September, it woke up. Look at the red and blue line, right? That's where we started covering it. The red went up, the blue went up, right? The long-term trend turned from sideways to up, right? Even the short-term trend, as by looking at the green 20 days moving average line, all right? So the red is the 100 days simple moving average. The blue line is the 200 days moving average. So when we want to buy any stock, we want to make sure that we are in the same direction as the trend, all right? In the longer term at least. Does it make sense? All right, we don't want to go against the trend. We don't want to go against the waves because I think it's just so much harder if you're going in the opposite direction as the trend, all right? So since August, we have caught for it, very strong longer term uptrend. Last year, August, right, all the way to now, you can see right now, obviously, the red and the blue line is still pointing up. So I think long-term uptrend still pretty much intact, right? And by the way, this is SGX. Let me just go ahead to write it out, right? Write it out in case. So this is SGX stock right over here. And there we go. Right, so let me just put it up. Right, so this is SGX, right? SGX right over here. I place it on the screen. Yeah, so longer-term uptrend is intact, right? Let's take a look at what it says in terms of my one good trend pro indicator. So essentially, guys, in today's show, right, I'm just going to share with you guys on the top stocks. But if you want to find out a little bit more in terms of the entire strategy and all that, you can attend one of those free webinars that we're running. All right, I'll share with you guys the link later. But today we'll be just pretty much just doing a quick analysis on the stock. So you can see that I can turn on my one good trend pro indicator in a matter of seconds. Any stocks, any asset classes, get an opinion. So let's turn it on, and there we go, right? So you can see for SGX, I think we actually had a couple of like bullish signals coming out. That was like in November, started to push up. We got bearish signals February, even in April, right? Trump introduced what we call reciprocal tariffs. We got a bearish signal came down, but a week later, we got two new 1GT bullish signal. All right, in fact, over the past like 1 week on the 26th June, last Thursday, we got another new 1GT bullish signal. So not too bad. 1, 2, 3 bullish signal. It seems like we're making our way back up right now. Let me just go to see what could be the potential, I would say, support level for SGX right now. I'll say that, we have kind of like broken this $14.50, $14.60 resistance level. So we are kind of like making our way back up. So we got a new 1GT bullish signal. Now it's about $15.12. So I think not too bad. Targets could be revised. So we have reached our targets, guys. We've reached our targets. I think targets could be revised maybe all the way to the $16. I think anything above that $14.60 or maybe even above this $15, targets could be revised all the way right now towards that $16 towards the $16. So this is SGX, right? The stock that we shared in May. All right, JB covered on warrants as well. And of course, it's gone a little bit higher. All right, so maybe I'll just pass on the mic back to Jamie to see, perhaps how the warrants have done, and perhaps, if targets could have risen to like $16, what could be the potential upside, by trading on the warrants of SGX, right? So Jamie, back to you.
Thanks, Joey. So again, just to quickly recap, what you shared on the show on 6th of May was that $14 did look like an interesting support level. And for those who are looking to just be a bit more conservative, they could potentially look for the $14 entry level and then target for $15. And of course, now you're saying that upside target $16. So we're not quite there yet, but that was also the upside that you mentioned, right? That it could go to $16. Of course, $15 is a possible profit-taking level as well. So with those views, how did the warrant that we mentioned, YCNW, on 6th of May pan out? Well, if I can just quickly share my screen, on my website, warrants.com.sg, into the historical performance tab, where I can recap on the performance of all warrants that one is interested in. In this case, I'm on the historical performance page, which is found on the warrant tools dropdown. And to quickly find the warrant that we were talking about on the show previously, I just need to choose SGX. And the warrant we talked about was YCNW. And this warrant listed in February. But of course, we are trying to do a recap from the last show. So if we looked at a $14 entry level, that would have been maybe about a week or so after the show went live, Joey, I think around 13th of May, the shares were trading around the $14 level. So if those who, again, like you said, wanted to be a bit more conservative and wanted to get in around that $14 support level, which seems to hold, then a possible entry point will happen on 13th of May. Now, how has that panned out? Well, it's up 8% over the last 50 calendar days, and
Nice.
this warrant will have gone up just under 3 times of it, 19.4%. HKEX has been a really interesting one. About 2 weeks ago, basically, there was a flurry of IPO news and
Yep.
announcements, right, Joey? And that really gave
Yep.
the extra oomph to the market, which has to the stock, which has led it to its record high levels. And if you were waiting to get in on this kind of catalyst, for example, then of course, if you had waited a month later, I think it was around 23rd of June when the first bout of IPO announcements came out, right, from various companies expressing interest and obviously officially filing on the HKEX. Then, of course, that happened only in the last 9 calendar days. The stock would have made a 9.5% move up, and it went below $14 at that point, of course. But this warrant would have gone up basically about more than 8 times, about 80.5%, from 4.1 cents to its current 7.4 cents. So in both examples, what you have seen is obviously the warrant return being magnified more than the stock. And this is why you would probably want to consider using a warrant versus the share instead, because of its ability to magnify returns. Of course, if you were wrong, the losses will also be magnified. But in this case, of course, Joey's idea panned out well, and so this warrant is up. Of course, the amount it's up varies. If it takes a longer period of time, to go up. So again, going back to the example of 13th of May, then you see that it's actually up less, right? But if it takes a shorter period of time to go up, then you're going to make more returns. And that's really how warrants work, and which I can go into greater detail later, based on Joey's new idea. But of course, if you were still keen on HKEX because the upside target has been revised to $16 and you're not, you could either get out here, of course, but if you were keen to get in only now, and looking for a $16 upside, then we do have a new warrant that listed just today actually, is YJ4W, which expires on 30th of December. So it's a bit longer than the warrant that we previously talked about, which will expire on 26th of May. So 26th of September. We read this backwards, 26th of September 2025. And so this warrant will potentially give you a longer holding period, based on your view. And how can we have a look at it? We can use the calculator tool, for example. So if I just click onto it, based on Joey's new upside target of, say, $16, you just need to put it in here, $16. Okay. And you see that, of course, if that happened today where the stock went up 5.5%, this warrant will go up by 32.5%. However, we want to use this tool to help us estimate the maximum holding period of this warrant. And so we just need to increase the slider here, and you'll see that the percentage gain will drop. In this case, about 29 days from now, if HKEX were to go up another 5.5%, then this warrant will grow by 19.3%. So that's close to 4 times more HKEX shares. If you hold it for longer, the percentage gain is going to drop, and you just want to keep increasing it to the point where the warrant has just very little, gearing abilities or very little leverage. In this case, it's only going to go up by 7.2% if HKEX went up by 5.5%. So what this means is that if you were looking at a $16 exit level by coming into the warrant now at 8.3 cents, then your maximum holding period is around about 50 days, right? So that would be about a month and a half. Okay, and if HKEX didn't go up to $16 during this period, you probably want to consider exiting from the warrant. Even if it's a loss, it's okay. We look for the next opportunity. Now, from here, just from this simple example, you already get the sense that with warrants, it's different from trading the shares. If you wanted to hold, aim for $16 or $20, and you wanted to hold it for a year, then you're probably better off buying the shares directly. But if you're looking for a way where you can put up lesser capital compared to buying HKEX at $16, because after all, $15. After all, it's now $15, right? So, it's going to require more capital than before. And if you wouldn't prepare to come up with that cash outlay to invest in $15 HKEX shares, you can consider using 8.3 cents to get into this call warrant instead. But the difference is that your holding period has to be much shorter, and so you're really getting in because you think HKEX will move in a big way towards your exit level within a short period of time. And that's where you can use instruments such as warrants to really magnify the returns, as we have seen in the YCNW based on Joey's price target previously. And this has gone up basically. How much has it gone up by again? It's gone up by 19% versus 8% in HKEX. Okay. So Joey, obviously, another very successful idea, and hopefully this is why your followers will continue to dial into the One Good Trade live show, because we're really narrowing it down to just that one good trade that you're looking at the moment. So the next question naturally is, what is the one good trade we can look forward to? Of course, you have shared that HKEX has got potentially further upside from here. But what if I've already, I'm happy with the gains I've made, in HKEX, and I'm looking for a new idea with potentially more upside? Would you be able to share what that new idea looks like?
Definitely, right? Definitely, guys. I think Jamie have done a very good kind of like a review of what has happened to SGX in terms of the warrants. So great, guys. You want to check out warrants as well. You can go to the Jamie's website, McQuarrieWarrants, all right, .com.sg, all right, and that's where you can find a little bit more. So let me go ahead right now to dive into the new, top Hong Kong stock for today. Okay, let me go to share my screen, right? Let me go to share my screen. And this stock, I think some of you might know as well, this stock is none other than Pop Mart, right? Pop Mart. The code is 9992.HK. Of course, Jamie will come on later as well to share a little bit more on how warrants can be used to trade Pop Mart as well to potentially magnify your returns. And let me know, guys, how many of you actually have Pop Mart toys, dolls, bags, or whatever, this type of P, guys. For Pop Mart, guys, if you're one of those who are like a fan, right, you actually have like Pop Mart, mini toys and all that, let me know that P for Pop Mart.
What about you, Joey? Do you own anything from Pop Mart?
Well, I don't
the
personally own
Labubus?
it. Definitely. So I want to share as well that, for me, my daughter, right, is about 10 years old, and she loves all the little, like Crybaby or Labubu toys and stuff. So I don't own it. My daughter owns it, right? It's on the bed and stuff. And it's like a craze. It's a craze, right? I don't know. It seems like every store is so crowded, right? And okay, let me just share very quickly, in case some of you might have no idea what is Pop Mart. So basically, guys, Pop Mart is a Chinese designer toy company, right? Best known for its blind box collectibles, right? So it comes up with those very cute characters like Labubu, Molly. I have no idea what they are, right? Skull Panda, Pucky, and this is pretty much what they have, right? What they have on let's see, right? Over here we have Pop Mart stocks, no toy, very good, that's very good. Me as well. So basically, what happens is that for Pop Mart, they create those kind of like dolls, right? Dolls, very, very, like this is Labubu, and then there's like Crybaby. I think recently there's one called Monster, whereby people are queuing in Orchard Ion, very long queue as well, and it's like people are queuing like a few 4-5 hours just to get a hold of this limited edition kind of like toys. So my daughter actually have a few, and when we go like overseas, like shopping, I think in Singapore they have it, but when we go to like Hong Kong or Shanghai, China, and we go to this Pop Mart store, I can tell you it's like super crowded, right? Super crowded. It's like people are all queuing to pay money, and it's like all sold out. You can't even buy any of those like dolls. It's like all sold out. Maybe there's like one box left, right? And I would say it's like very hot, right? And it seems like there's a huge craze over this whole thing. What about you, Jamie? I mean, have you got any experience with this kind of like toys?
Well, I personally don't own anything from Pop Mart. But during Chinese New Year, I would say in February, I was quite shocked that every other auntie, I'm talking about those in 50 and above, as well as their older children, teenage children, were carrying one. And I guess for women, what's become quite fashionable is to attach a Labubu doll to, their
Yeah.
branded bags, right? I think that trend really started from Blackpink's
Yeah.
Lisa.
Yeah. Yeah.
So, after that, basically, every other Blackpink fan or Lisa fan own a Labubu, and then it got so trendy that
Yes.
now people feel like they just want a Labubu. Well, my daughter is only 4 years old, so no Labubus for her yet, but her auntie, my older sister has said that when she's older, she will get her Labubu. So yeah, it's a craze. Don't know how long it lasts. I personally am not into it, but a
Okay.
lot of people are. And
Yeah.
in fact, one of those things we're thinking of doing then, is to also jump on the trend, potentially maybe give away a blind box,
Yeah.
for people who trade our Pop Mart warrants, in the near future. So we're really trying to jump on the bandwagon as well.
Yeah, very popular, very popular. And I understand why as well, because when I go to this store, so it was my first time going to this store, my daughter said, let's go to Pop Mart. I'm like, what's that, man? I just go, all right, and it's like super long queue. And I go to all these boxes. You can see right over here, right? So in this I don't know whether this Labubu or what, but it's like in a tray, there's like six boxes, right? And I just say, why not just get the pink color one, or I mean the green color. Then he said you can't choose. What do you mean you can't choose? Right? It's a blind box. So it's like, wow, it's like, so you have to like just try your luck and get one. And of course, we got one that's like yellow color. And my daughter said, yeah, why yellow? I would like purple and stuff. Like, oh, no choice. Then we might have to get another one. So it's like, wow. It's like they just doubled their sales, right, from just one customer just by having this whole blind box kind of like mystery kind of, so people who are collectibles, they want to get like all different colors. They will probably want to like, buy 6 of the boxes. So I think that's where I think sales is tremendous. Is huge sales over there. And it's long queue. So I tell my daughter, looking at the sales that is coming in, looking at how crowded the store is, right? I think don't buy the doll. I want to put the money and buy the shares instead, right? Invest in the company rather than the product, right? And that's what I told her. So so I think this is a very, very interesting company. All right, they're growing very rapidly. Let me just go to share with you guys some of the reasons. I think some of you might be Pop Mart fans as well. You're holding on to Hello Kitty, right? Same craze, it's all hype. Yeah, I think some of you might say it's hype as well. But I think right
Well,
now,
I would say if you think it's just all hype and you don't think that this will last for a long time, then that's where you can consider warrants, because it's really for you to only participate in the short term.
yeah,
Of
correct,
course,
more
we'll
in the
go
short
to
term.
warrants, but I'll go into that later. I think Joey, we're very excited to see what you have out there in terms of the levels to look out for. How does the Pop Mart charts look? Are they
Sure.
popping?
Let's go ahead to, okay, so I'll just go ahead to cover very quickly, guys, maybe some of the reasons, why the shares are doing really well, all right? And then maybe we'll dive into the charts of Pop Mart later, right, to see how it looks technically on the chart as well, right? I think we have like Biscuit, own the shares better, right? I agree, right? I mean, if it is doing very well, rather than buying the Labubu, and I heard that one Labubu, kind of like a doll or something, limited edition, could cost like $8,000. My God, it's like crazy, all right? And yeah, so let's take a look at some of the reasons why I think Pop Mart is so successful, right? Some of the growth reasons to buy Pop Mart as well. The code is 9992.HK, right? So let me just pull up right up here. Okay, so some of the key reasons would be like, I think the revenue for Pop Mart more than doubled in 2024, all right, up by 106.9% to renminbi, about 13 over billion dollars, right? So it's growing very fast. Revenue is like kind of like doubling. There's kind of like global expansion as well. So they started in China, Hong Kong, and kind of thing in Asia, but they're kind of like expanding into the world, in the US, into Europe. International sales jumped by 375% to renminbi $5 billion this last year, all right, and that makes up nearly 35% of total revenue, right? So they're kind of like growing their revenue, not just in Asia, in China, but also in the rest of the world slowly, right? That is accounting for a huge portion of their total revenue, right? And of course, they're opening stores, 130 stores right now, nearly 200 vending machines. So I do understand that they do have some vending machines, but you can buy some of those toys as well, right? And they're expanding into Europe, into US, of course, in Southeast Asia as well, right? And what I read was that 4 of the top IPs, right, the intellectual property that they have, right, Labubu, Molly, Scout Panda, I think Crybaby that my daughter has, right, each generated like maybe $1 billion in revenue, right, and they have 13 others as well exceeding that threshold. So they are always coming out with like very new characters, I don't know, right, the different characters that's coming out, launching, a lot of hype again. And I think that's where it's pushing growth as well, right? Not just depending on like the previous characters like Labubu and stuff, right? They're always coming up with new characters, right? And Labubu alone, right? I think Jamie mentioned as well, I think Labubu alone saw more than 700% sales growth in 2024, boosted by celebrities. I think Blackpink, Lisa kind of carried it and created a lot of hype. Everybody rushed to get it, and the value of it just soared up, right? So very strong brands and customer loyalty. So I think there's this whole blind box surprise, right? As I say, right, when I bought one of it, and then you just probably want to get one more to try to see if you can get the right color, all right, that you want, all right. So I think that kind of like created a lot of a buzz as well, all right. And of course, in the secondary market, there's a resale market for it as well. There's scarcity because everything's all sold out. You want it and you can't get it, right? So I think that's why I think there's a lot of repeat customers going back, and it inculcates what we call that whole collectible kind of behavior. So people are buying not just one, but two, but three, or four, or five, or six, right? So I think that's some of the reasons why Pop Mart is doing very, very well, right? In terms of the reasons, right? So let's take a look at what we call the chart right now. Let me just pull up the Pop Mart chart right now and see what has Pop Mart been doing, I would say, over the past 1 year. So this is Pop Mart, right? The code is 9992.HK, all right? Trading at about $263, right? $263. So you can see that for Pop Mart, guys, actually we have been covering it since, I would say, last year, right? Last year when it was like starting to push up a little bit. From like $20, $30, it went up to about $60 to $70. And most people will say, oh, it's getting a bit expensive. It's more than doubled, like from 20, 30, it went to like 60, 70. But you can see that very strong longer term uptrend. The red 100 days moving average line is up. Blue line 200 days moving average line is up, right? That has been up since like the beginning of 2024, right? All the way up. And I've turned on what we call my 1GT Pro indicator, whereby we had a couple of bullish signals. So that was like in August last year when it was like around $40. Another one over here, it went up all the way. And recently in February, we got another 1GT bullish signal. You can see from here all the way up about 53% in about 2 months. And then we got a bearish 1GT signal. So that was on the 7th of April. So I think 7th April, of 4th April, 7th April, that was when Trump actually introduced what we call reciprocal tariffs. Most of the stocks that were very strong also sold off, broke certain support levels, and it sold off. So that's where we got a bearish signal. But what happens after 1 or 2 weeks, right? We got a new 1GT bullish signal, all right? Long-term trend was up, right? So on dips, whenever we get a bearish signal, well, we want to wait for a re-entry to get back in, especially if the longer term trend is up, especially if the short term trend, look at the green line, was actually still pointing up. So when that 1GT bullish signal came back, you see, guys, it started to rally all the way from about $166, I think somewhere over here, all the way to where we are right now, about another 60 over percent. All right, 60 over percent in just about 2 over months. All right, so let's see what is happening right now. So I would say that right now for Pop Mart, all right, we are seeing this support level. So let me go to turn on what we call the trailing support level. So, from this 1GT Pro indicator that I have, right, what happens is that we have this trailing support level that can be turned on. That just gives us a little bit of an idea of the support level. So as Pop Mart moves higher, you can see this trailing support, this green line, actually follows it and moves up. So you can see up, flat, follow. And it follows it. When I mean follow, it doesn't mean it follows it so closely, right? It gives it space to breathe, hopefully allowing it space to move even higher. And so far, you can see we are still above this upward, moving, trailing support line. In fact, right, just in like June, we sold off a little bit. I think there was some news on like, government kind of like potentially restricting miners on this blind box, kind of like blind mystery boxes, right? So it kind of sold off a little bit, but it neared the trailing support, and that was like around $230, and you see it started to see a rebound from it as well. So I think not too bad, right? We're still holding above that trailing support. This bullish signal in 22 triggered on 22 of April. Obviously, it is still playing out. There is no bearish signal in sight, right? So let me just go to see what could be some of the new higher support levels that have popped out. I would say that perhaps 250, if we draw it right over here. So 250 potentially would be a psychological support level. So you can see we broke up. Of course, we broke down as well. Over the past 1 over week, we went back above the 250. So it used to be like about 230, about 230, as I mentioned, 230. All right, 230. But then I think now 250 would be kind of like a higher support level for Pop Mart. If you can stay above the 250 or even 230, I think the uptrend looks pretty much intact. We could potentially hit higher towards our near-term target at about 280. So I think 280 may be a bit of a resistance. Look at this. That was where we were in June, earlier June. We touched it a couple of times, sold back down. So 280 all the way to maybe 300. So I think that could be kind of like the upside targets near term for Pop Mart, all the way to maybe about 300 first, and maybe a bit of profit taking, a bit of sideways movement. And I can tell you guys, if we were to break 300, right, potentially, I think targets could be revised even higher to like maybe 320 or even 350, right? So I think Pop Mart has been one of the top performing Hong Kong stocks, doing really well, all right? Reasons I think I've covered just now as well. Technically, I think it looks pretty strong. We got bullish signals just coming out one after another, and it just keeps pushing even higher. All right. So that is Pop Mart, right? One of the stocks that you can put in a watch list. So maybe now, I'll pass on the mic to Jamie to share with you guys as to, based on the current price of Pop Mart, right? How could one actually take a position using warrants, all right, which Jamie is expert on, to potentially magnify your gain. So you can see right over here, like for example, let's say we're looking at the entry near 250 or 260 all the way to 300. We are looking at about a 13 to 14, 15% kind of upside, all right? If you are kind of like trading the underlying stock, right? 13, 14, 15%. I mean, still okay, right? Pretty okay, right? 13, 14, 15%, a couple of let's say a month or two, right? But if you were to use warrants, what happens, right? Is it just 13, 14, 15%, or is it like more than 20, more than 30%, right? So I'll leave that to Jamie to share with you guys on how you can potentially magnify your return on this very strong stock. All right, so Jamie, I'll pass on the mic back to you. Go ahead.
Yeah, Joey, 13 to 14%. I mean, just looking at how the history of how Pop Mart has moved, it was down 20% in a week, just 2 weeks ago. So, that could be easily achieved, I don't know, this week or next week, right? Just because the volatility of this share is so high. And your point about how it's one of the top shares in Hong Kong, and indeed, it is the top performing share on the MSCI China Index for the second year running, or at least it's on track, right?
Amazing. Yeah.
It's amazing. And I guess, but amidst how amazing it's been, precisely because it's been so phenomenal, I think one thing that people, investors or current, I mean, we've had some people like Biscuit saying owning the shares is better, or SK saying he or she owns Pop Mart stock. I guess one question I have before I go on, Joey, is what is the near-term support we should be looking at in the event that it does break? Does that signal a new downturn? So what is that level potentially we're looking at, to suggest that the trend might be changed in the short term, towards the negative zone?
Got it. So I would say that the near-term support level would be, in terms of the past 1 over week, very near-term support will be about 250. All right, let's say $250. You can see that's where we saw a bit of bargain hunting coming back over the past 3-4 days. So 250, that could be like a very near-term support. I think one could potentially think about maybe on dips getting in near there. Look at this, right? The short-term trend is still up. So any on dips, right over here, that could be a good support level. Of course, if we were to break like this support level and even what we call like the trailing support. So normally when we talk about like, giving allowance to the stock to breathe and stuff, so 250 would be what we call a horizontal support level. But if you want to give a bit more allowance, then maybe, if it does go below this trailing support, that is somewhere around 225 or 230, or 230, let's just say about 230, right? I think that would be where one would probably want to have a plan to exit, to take some profit, because that's where, after giving the allowance and it accounts for volatility, if the price breaks below the 230 level, that's where it just looks a little bit more shaky, right? We could see a bearish signal coming out, and then it might not be so strong. But anything above 230 or right now above 250, I think it looks pretty much still poised to push even higher. All right.
Thanks, Joey. Now, the reason I'm asking is because you do need to be very clear on the entry, exit, as well as the cut loss levels when you're trading warrants. As I've explained earlier via HKEX warrants, warrants are not meant to be traded like shares. They're really meant to be used in the short term, where you expect the stock to move, whether on the upside or downside in a big way. And you really want to then jump onto the opportunity and magnify your returns with a lower capital outlay. And if so, then you want to use an instrument like warrants. But of course, if you think that Pop Mart can continue popping all the way to 300 and more, but you don't know when, you maybe give it a year, then of course you go ahead and buy Pop Mart shares that's listed in Hong Kong. But if you wanted to participate in the move based on Joey's shared levels in the short term, like I said, 13-14% is so easily done in a week for Pop Mart, right? With the recent volatility, then you can probably consider Pop Mart warrants. Now, how can you select them? Now, you go back to the Best Warrants website that I think you can find in Singapore, because it is the only warrants website. But more importantly, it's got different tools that you can use to your advantage. So in this case, the tool I would recommend to select a Pop Mart warrant will be the Warrant Selector tool. It's one of those tools I previously covered, and in my opinion, one of the easiest tools you can use to quickly select a warrant. Now, if you believe that the uptrend is intact and you wanted to get in and potentially aim for the 280 target exit level, you can do so. Of course, that is a 6% return from the current levels of 264. But if you wanted to be just a bit more conservative and you wanted to enter only around 250, which is a horizontal support level that Joey has said and pointed out, then you can update the last price to 250, and the warrant price would change accordingly to what it would be today if Pop Mart shares were to trade to 250. And again, not difficult for it to go back to 250. I mean, just again, the recent volatility, it's up, down like 5% and more in a single day. So if so, then you are obviously looking at a higher upside of 12% returns via the shares. How will the warrant perform? In order to find out, you can increase the number of weeks here. Okay, if I update this to 2 weeks, you will immediately see that this warrant will now grow 32.6% from its current price of 4.6 cents to 6.1 cents. And this is why you use a warrant instead of the shares, because with the shares, you of course make 12%. But with the warrant, then this is listed in Singapore and HKEX, so it's traded in Sing dollars. Okay, so it's not going to go into a custodian account. It's going to sit in your normal, CDP trading account in Singapore. Now, you will be able to get out at 6.1 cents because that's where your profit-taking level is in the shares, and you will get out at 32.6%. But if you held it for a week, or at least if Pop Mart took only a week to do so, you'll notice that the gains is more, 41.3%. Now, why is that? Why is it that with time, your returns diminish? Still, more magnified compared to the shares, but why do they diminish? The answer lies in the holding costs in a short-term trading instrument such as warrants, but they exist for all other leverage trading instruments that give you, gearing and leverage. With time, the longer you hold, the less returns you will make because of the holding costs. Now, we keep increasing this to the point where we no longer see gearing or leverage versus the shares, because we want to work out what the maximum holding period is. In this case, if you held on to it for 4 weeks, your return now goes down from the 33% that we're talking about to half of that, 15%. Okay, which is still a little bit more than if you bought Pop Mart shares, but you can see it's already diminished versus 3 weeks ago where it would have grown by 41%. Right? In this case, if you were to continue holding on beyond the 4-week period, you'll find that the warrant now is down, not down. It's down from before, but it's up less than if you had bought Pop Mart shares directly. So it's no longer economical. It no longer makes sense for you to hold on to this warrant. Therefore, if your target level was 280, you want to hold it for no more than 4 weeks. If you want to hold it for longer, you can, but it just means that your upside target needs to be revised. So in this case, Joey also mentioned 280 to 300. So if it was 300, you'll then find that even if you held on to it for 5 weeks, you will make 41.3%, which is about a bit more than 2 times more than the underlying share return of 20%. Okay, and again, the same exercise, you only need to keep increasing the number of weeks to see, okay, the maximum holding period in this case is now 7 weeks. Whereas if your target level was 280, your holding period has to be less. In this case, if you continue to hold on as if you were holding on to shares, what will happen? In this case, the warrant will be negative because the holding cost will have eaten into the leverage and geared returns provided by the warrant. So the knowing your maximum holding period is very important with warrants. They give you magnified returns, but you also need to be conscious that it's a short-term trading instrument. How short term? The answer lies in tools like Selector, which will give you an approximate 4-week holding period based on this target price, and about 7 weeks based on a 300 upside target price. Okay, now if you wanted to know the approximate date that you can hold on to it for, you can then use another tool called the calculator, which was something we did previously with HKEX. So in this case, it's a bit different for the Selector because you now need to know exactly what warrant you're keen on looking at. But we've only got one call warrant over Pop Mart and one put. So that one is quite easy because it's quite a new instrument that we've listed over. So then in this case also, you just need to put in, your target level of 300 and your entry level. If you wanted to get in 250, of course, you can play around with the dates. If it's not happening today and you think that could happen tomorrow, you can move the date. In this case, if Pop Mart went to $300 at the end of this week, which is a 20% return, then the warrant will grow by close to 5 times of it, 91%. But of course, now we're trying to work out what the maximum holding period is. We've seen earlier, it's around 7 weeks for 300 target price. So 7 weeks from now will be about around August, end August. And if so, yeah, there you go. If so, on around the 22nd of August, that would be your maximum holding period. So that's something a date you want to look out, for if you were looking to trade this Pop Mart call warrant. Well, the wonderful thing about warrants is that it doesn't only allow you to participate on the upside, it also allows you to participate on the downside, which is why I asked Joey, what is the kind of the break we're looking for whereby the uptrend would change, because you don't only need to go trade long, and meaning with shares you can only buy, but if you're a shareholder and you're worried about a change in trend in the short term, you can actually use the put warrant to hedge. Okay, how so? Well, that calls for another tool which we invented to help shareholders really work out what kind of returns they can potentially make with the put warrants to offset the losses in Pop Mart shares. The tool is called the Exposure Simulator, not unfamiliar to those who dialed into the last one, Good Trade Call, because we use that to work out the expected returns in HKEX warrants. So in this case, we probably want to look at a put instead. Okay. And how we use this tool is you need to put in, the number of shares that you currently own. So for example, if you currently own about 5,000 Pop Mart shares, right? In terms of Singapore dollars, that translates to about $214,000 worth of Pop Mart shares at this point in time. Okay, the shares trade in Hong Kong dollars, but of course the warrants, are traded in Sing dollars, and we're keen to see how much Sing dollars you've had to cough out for this trade, right? If you currently own about 5,000 Pop Mart shares at the current value of $264 in Pop Mart, it translates to a portfolio value of 214. I mean, you might not have put out that amount, you might have put out less than that, but of course it's gone out. Now, if you wanted to protect this portfolio value of 214,000, and you were worried that it could fall to 213 and below, of course, maybe you want to, you only want to participate in a put because it's broken and maybe 230 support level that Joey was talking about. In this case, it came down to 225. Now you see that your portfolio value will already have gone down. But from this point, if you're worried that it could go further down, then you can probably consider using a put warrant, and you only need to cough up 67,542 Sing dollars to hedge this portfolio value of 182,000 at Pop Mart share price of $225. This warrant at this point will have a gearing of 2.7 times, which means that if Pop Mart moves down 1%, this warrant will approximately move 2.7 times of that, around 2.7%. Okay, this warrant will cost about 7.6 cents based on this underlying price of 225. So you need to buy 888,700 units of this warrant to hedge your Pop Mart portfolio worth 182,000. Okay, so all that is automatic. It works out for you. Of course, if you wanted to already hedge now, which is the current share price, at $264, you can. And in this case, then you actually need to use more, right? Because your portfolio value is worth more. You actually need to use $79,000, 249 of your capital, and buy about 1.5 million units of this Pop Mart put warrant. Okay, so going back to where we want to use it, maybe around 225. How this works out is you need to know and think about where Pop Mart will go down to. If it breaks the 230 support level, where do we think it's going down then to? Maybe that's a question I can throw back to Joey. What's the next support level that we're looking at? You've obviously got, maybe if we think 250 is broken, it goes down to, 230 maybe. That's a support level that Joey talked about. But Joey, what if it broke 230 as well? Where
Well, I
potentially
would
are we
say,
looking at?
yeah, I mean, let's say if 230 were to be broken, okay, let me just go back, share my screen. So let's just find out. So for example, I would say that we have the next support level for Pop Mart, maybe around 200. I think 200 would be a psychological support level. Why? Because previously, somewhere in April, look at after we got the 1GT bullish signal coming out, you can see we were actually consolidating below it for about 3 weeks. Look at this right up here. Pump, we went above 200, and there we go. The rally actually started more. The 20 days moving average line started to point up even more. So I think if we were to kind of like break, I mean, let's assume that if it does, doesn't mean it will happen, but if it does break maybe the 235, 230, well, next support, strong support would potentially be near 200 because that's where we were pretty much trading below as a resistance, which is now a support. And it is also what we call a psychological level. So I think somewhere around 200, I think that's where some bargain hunting may come back again.
Yeah, thanks, Joey. So, based on that view, it's important to know where the support levels are, because if you're long-term bullish in Pop Mart shares, you're holding on to the shares. You want it to you believe it will ultimately go up, right? Which is why you're holding on to. But you use a put warrant really to hedge because you think it's going to make that drop towards the next big support level, right? Which is why I asked Joey after, if it breaks 250, if it breaks 230, what is really the next support level we're looking at? Because you're looking to get out there, right? You think that Pop Mart shares will continue to go higher from that big support level. And so with the put warrant, that's where you want to get out, which is the big support level. That will be your exit. With calls, you exit at the target price, right, where you sell. But with put warrants, likewise, you get out when it's gone down to the support level because you think the stock's going to rebound from there. So you sell out the put warrants. And you continue to go long in the shares. So, back to this exposure simulator tool, based on the current, if you wanted to buy a put warrant only if, it breaks 250 and you wanted to get ready to buy a put warrant, you could either have a downside target of 230 to get out, or you can look at 200. Well, that is a 20% drop from the 250 level that you're buying a put warrant. Okay, so that translates to a P&L loss of 40,500. Okay, again, this is if you're owning 5,000 Pop Mart shares, right? That is a rather painful loss, about $40,000. So if you're looking to hedge that, and you have bought this put warrant, you bought about 1.2 million of those put warrants when the stock was at 250, okay? In that case, then you'll find that if you held on to it basically for around 11 days, this put warrant will make you $44,000 to offset your $40,000 loss. Well, with warrants, remember, apart from the target levels, you really want to look at the maximum holding period. So we can continue to increase this, and you'll find that the dollar gains will, of course, drop because of holding costs. And we want to continue to increase it to the point where the absolute gains in the put is just enough to offset the loss in the stock, right? Because you're looking to hedge. Right? And in this case, you'll find that if you held on to the warrant for 17 days, basically the gains of $40,000, $700 will pretty much offset your losses in the Pop Mart underlying shares quite nicely. Okay, and this is really how you use the tool. You want to continue to increase after you put in your target exit level. You want to increase the number of days so that they they equate, both sides of the graph really equate each other, because then the put gains will offset the losses on your shareholding. Now, not a lot of time, only 17 days, right? That's about only 2 weeks and a little bit more. But that's really if you're looking to perfectly hedge your portfolio losses. If you don't currently own Pop Mart shares, that's when you want to just participate in the downside move, or you had sold off your Pop Mart shares, you cashed in your returns, and you're no longer bullish, then you can then hold on to this for longer. Why? Because you're no longer interested in the absolute dollar returns. You're really looking at the percentage returns instead. So if you continue to increase this, you see that even holding it for 25 days, this Pop Mart put warrant will make you 46% versus the 20% drop in Pop Mart shares. So you continue to increase it to the point where the gearing, or the leverage, the magnified gains that you're looking at no longer, is no longer more than Pop Mart shares. In this case, you'll see that if you held on to it for about 50 days, 50 days, then this put warrant will make only 22%. So this is the maximum holding period if you're looking to short Pop Mart shares at 250 and target for a $200 exit level. Okay, the maximum holding period for this put warrant will be about 49 days, 50 days, I think. It's 49 to 50 days. Okay, so this is also how you can use the exposure simulator to simulate these returns. Of course, you can also use what I used earlier, the selector tool. And then you, of course, select a put in this case. And the same, it's really all the tools are really consistent, whether it's the calculator or the selector or the exposure simulator. You need to always put in your entry level and your target exit level. And then increase the number of days to work out the maximum holding period. And that will be one way where you can ensure that you will be profitable based on your target levels via a warrant.
Yeah. Just to add in there, guys, I've placed the link, all right, warrants.com.sg, all right, pretty much where Jamie is, going through, all right, very powerful tools, guys. I mean, look at the simulation, all right, and what Jamie has gone through as well. That's how you can just, just tilt left and right to get the holding period, to give you an idea based on your plan, right? Based on your plan. So any trade that you have a plan, right? Entry price, target, exit price, and that's what you want to fill it in and to gauge whether it makes sense for you to take the trade, right? Based on the holding period and all that. All right. So I think we have an expert right over here, guys, Jamie, who is from Macquarie, called Warrants. All right. And if you have any questions, I think we have some questions regarding warrants, guys. So if you have any questions, right, go ahead to type it in the chat, right? Go ahead to type in the chat, and that's where Jamie, who is here, can help you answer some of those warrants as well. So I think Kuna, if you're asking, right, is this a call warrant? So I think Jamie kind of covered call warrant and a put warrant. So just keep it simple, keep it simple, guys. If you want the stock to move up, you want to take a long position, right? You want to think about buying the stock, right? Then you would buy what we call the call warrant. So call warrant is where you believe that the stock will hit up, right? However, if you think that the stock will hit down and you want to profit from the downside, that means it goes down, you make money. Then you can buy what we call a put warrant, right? Very simple. So call, you're going to go up. Put, if you think that it will go down. And that's how you pretty much profit from not just the upside, but you can also profit from the downside. All right. So yeah.
So maybe I can also add to Joey's point. The call warrant is XY5W. So all warrants go by a unique identifier code, which is always 4-digit and alphanumeric. In this case, if you're keen on the call warrant, is XY5W. That's the code you put and type into your brokerage platform. Okay, you don't trade through Macquarie. Of course, we've got the trade warrants here, but you'll find that trade warrants here will take you into the different brokerages that offer warrants online. In this case, if you trade with Phillips Securities, you've got an account there, then you go into your trading platform and then you search for this warrant here. The put warrant code is KBNW. So that's something for you for Kunath and the rest of you to note if you're interested in the warrants.
Yeah. So you can buy warrants. Yeah, sorry, you can buy warrants. I mean, like what Jamie has mentioned, because some of our clients get confused, like, hey, like, how do you buy the warrants? Do you need to go to like Macquarie website and buy it? No, right? It's just like a normal stock, like a Singapore stock, your DBS and all that, right? Just type in the code, right? KBNW, right? The code of the warrants, find the warrants. It's just like a normal stock, Singapore dollar price, right? And you can place order to buy, right? You just need a trading account. So very simple. You can buy it through any trading brokerage account, all right? Yep. Sorry, Jamie, anything to add?
I do have I saw a question by Peter, a really good one. And Peter is asking,
Oh, yeah, let me
can
put that
we
up.
set a limit order, stop loss, and target price of warrants based on the share price?
Thanks.
That's a really good question, Peter. First of all, I just want to quickly share, in order to know how the warrants are moving during the day, there is another tool. We've got a lot of tools, but the reason for that is really to simplify warrant trading. We've got this tool called the Live Matrix. Okay, it's found here alongside the exposure simulator tab that I've demonstrated with, as well as the warrant calculator tool. And the really cool thing about the Live Matrix is it tells you where the warrant and how the warrant will move alongside the shares during the day. So if your target exit level, your target entry level, for example, was where the stock is currently is, then you can get in around about 5.5 cents offer. Or if you wanted to queue on the bid price to get filled, you can queue at 5.4 cents. If you were looking for the target level to exit from during the day and you wanted to set your limit sell order based on that, you can. The live matrix will show you only up to like a plus minus 5% move from here. Of course, as Pop Mart goes higher today, it will refresh. But if you can't find it on the live matrix, then the tool to look at is really either your calculator or selector. And today, if you wanted to exit based on like 280 in the Pop Mart call warrant, for example, you just need to put your limit sell order at 6.9 cents. Can you put the sell order and leave it overnight? Peter, the answer is no, because I guess first of all, limit orders they're swept away, right? At the end of the day, if they're not filled, right? It's a FOK order, fill or kill, correct, Joey?
Yeah, I would say that certain stocks, depending on the trading account as well, I think certain order types are limit that there might be a good to date. So it really depends, right? I mean, if you place what we call a good to date order, like some Singapore stocks, there's a good to date orders up to a certain date. Yeah, then the order would still be good. I mean, the next day might still be queuing. All right. So I think it really depends on where you place the order on the different
Right.
account type as well.
Yeah.
All right. Yeah.
So with warrants, it can't be good today because, as I've demonstrated earlier, it's going to be at 6.9 cents today, but tomorrow or on Friday, it's going to be lower. Why? Again, because of the holding cost. So with warrants, unfortunately, I think if you wanted to set a limit buy or sell order, it has to be only for the day. So basically, if the share went to your target exit levels or entry levels during the day, then you can set it. So for example, you wanted to enter at only 250, right? You don't want to enter now. So in that case, you can put 250 and the order to queue at is 4.5 cents on the bid. You can queue to get filled there. Of course, you can immediately get done if you queue at 4.6 cents on the offer. So that's how you can put a limit buy order during the day and limit sell orders. You can leave it in during the day, but it doesn't get filled. Then you have to use the calculator, or you can give me a call, at 660-10289 to find out what the price is if you've got no time to use the tool. And then you can put in or get your Remizer to put in the order for you if you're not free to log on to put in the limit sell order. Okay. And really the simple reason is because the target exit levels, whilst it is consistent on the share, but on the warrant is going to be subject to change because of the holding cost, right? So you have to update this limit sell order day on day if you're looking to get out.
Yeah, just to add on, guys, I mean, for warrants, right, like I think Jamie have shared, right, just take note, right, warrants is meant to be a short-term kind of trading instrument, right? So don't just buy it then and like keep it like for a few months, 5 months, 6 months, 1 year, that kind of thing. No, right? It's meant to get in and get out. Hopefully within the next 1, 2, 3 weeks kind of thing. All right, you get in, you write the position, it goes up, you get out, you make your money. That's it, right? It's not meant to buy and hold. So if you're gonna do like buy and hold, then please you get the underlying stock. You can keep it how long ever you want. But for warrants, it's not meant to buy and hold. Just to make sure you understand this whole concept. All right, Ken. I think we have a few more questions. Jamie, you want to take them? I think we have like let's see, right?
Yeah, so Chin Sing has asked, we don't see the bid and ask, we won't know the liquidity. Well, first of all, the bid and ask is already shown on the live matrix tool. Like I said, if you wanted to look at the liquidity, you can look at it on, the live matrix tool. We don't show you what the quantity is because that's constantly changing sometimes, depending on what the share price liquidity is. But it can be found It can be found either on our terms page, or it can even be found on your brokerage trading platform. But in this case, if you wanted to see it on the website, in this case, it's called the warrant search tool. You will be able to see it here. The liquidity is 5 million units on the bid and 5 million units on the offer. Okay, this is also the same for the put warrant, 5 million on the bid, 5 million on the offer. The reason there is that liquidity of 5 million units consistently is because Macquarie acts as the market maker in all the warrants that we issue. So there will always be a bid and offer, price for most warrants. Unless they're worth nothing, of course, or if the stock was on a trading halt, then the warrants will also be halted if the market was shut in Hong Kong. Then we wouldn't have a bid and offer price. But if the stock is alive, the stock's got a bid price, then typically the bid and offer price will be quoted by us, as will the bid and offer liquidity. So in this case, even if the warrant had not traded yet, so in this case you can see the traded volume is 0, right? Not to worry, you can still easily get in and out for 5 million units of warrants. At any point in time. You want to get out of 10 million units, also no problem, because this will refresh, because Macquarie is there. And that's our role as a market maker, to continue to provide prices as well as liquidity, even if no one was on the screen. So I hope that answers your question, Chin Sing. The liquidity is known. You can see on the warrant search tool, as I've shown you. But of course, if you're using your brokerage trading platform, you will be able to see the bid and offer liquidity on both sides as well.
Definitely. I think we have one more question. Very, very good question by
Biscuit.
Biscuit team. Wow, very nice picture as well, Biscuit. Hi, morning. Is warrant the same as option? These are the very popular questions, lah.
Very popular, Biscuit. I suppose you're quite new to this show, because we almost cover it in every show, right? Which is a good thing, which means people are interested to know the difference. Well, I'll first of all say warrants are a form of option. So things like, the exercise price, the conversion ratio, which we call warrants per share here, call or put, or even the concept of time decay, that can't be foreign to you if you already know, or you are trading options. However, I would say the big difference is really with warrants, you cannot short them. There are a lot of option trading strategies which involve, going short and earning premium, right? With options, sorry. But with warrants, you can't do that, because they are a security that's listed on the exchange, on HKEX. And with all securities listed on the exchange, you cannot go naked short on any of the securities, whether it's a call or put, because then you'll be subject to the buy-in market on T+2. Okay, so you can't short, and therefore with warrants, you can't use all your option trading strategies, right, that you are used to. With warrants, it's really quite vanilla in the sense that if you're bullish, you buy the call, you find out a maximum holding period. If you're bearish, you don't short the call. You can short it during the day, but you have to cover it. But if you wanted to hold it for, you're doing a swing trade, a position trade, you wanted to hold it for a few days, then you only can buy the put. Whether you're bullish or bearish, you can only buy. And so in that sense, it's a more straightforward product, so to speak, because it's less complex in a sense where you don't have so many different option trading strategies to execute. And because you can't short it, it means your losses are also capped and they're not unlimited, right? When you short something, it can be unlimited. I think that's the biggest, really the most significant difference with warrants, because you can only go long. The maximum you will lose is when you decide to cut, which is why I shared about maximum holding period, etc. Because if your view doesn't come true based on the maximum holding period, you need to get out, right? You need to cut your losses, and it's okay. You look for another opportunity to enter and hopefully multiply your returns via that warrant. So it is more straightforward in that you cut your losses based on where you want to exit. But if you held on to it forever, and by forever it's really only until the last trading day or expiry, then in this case the maximum you lose is potentially that the warrant goes to zero, and you lose whatever capital you have placed up front. But you really shouldn't be doing that, because Like I said, with warrants, there is time decay. It's going to eat into your gearing. You should be cutting losses if your view was not correct, or taking your returns, your gains, if the target exit level has been met in the stock, right? You shouldn't hold it until it becomes potentially zero. Why do people hold it? Because they think it doesn't become zero. But if your view was wrong, and you held it, from now until October, which is 8 months from now, you know, it's very hard for you to make money unless, I don't know, Pop Mart goes to $1,000 in a share price. I mean, we can work it out. If you go into, obviously, with the calculator, that's one way of seeing. If you held it all the way to expire, you went it, you move to the maximum. What should the price of Pop Mart be? In order for you to still make returns. In this case, I guess $500, you will still make 374%. I guess if it was $400, will you still make money? Let's have a look. Yeah, you will, but it's going to be less than what if you had bought the shares directly, right? So for you to make money in Pop Mart warrants and expiry, that means you hold it and you don't want to exit from it. You want to just buy and hold. Pop Mart shares has to go to at least $450 from the current levels, okay? If you wanted to hold the expiry. But if you were to get out within a shorter period of time, you're going to make way more returns, of course. So what's the moral of the story? When your profit target levels have been met, get out immediately. Okay, and you think it could then consolidate and go higher, you can re-enter again.
Yeah.
Okay, so that's something you need to
I think
know
it's very good sharing. Yeah.
with warrants. With options, actually, it's going to be similar, because if you hold onto it, it's also going to decay. But I don't have the tool, because warrants, whilst they are a form of options, they are not options. So I don't have the tool to show you the maximum holding period for option, and that's something you need to work out separately. But I would say you also typically will not hold it to expiry if it was a plain vanilla trading strategy where you're looking to just maximize your returns based on the target exit level in the shares. Of course, if you use different straddle strangle strategies, you could potentially hold it expiry, but that I wouldn't be able to advise you, and really it's up to you. We have a 1-minute video if my explanation for you was not good enough on the difference between warrants and options, because it's such a popular question. It's under our frequently asked question. Okay, in this case, we've got a very fun way of telling you the difference between warrants and options. Here you go. It is this video. It's only 1 minute, and we will tell you the main differences between warrants and options. But I hope, Biscuit, I basically explained to you very quickly what the big difference is. I hope.
Yep. Very good. I think very good. I think what Jamie has said, like regarding I want to add on as well regarding like the let's assume if the stock starts to consolidate, and also you know, the longer you hold, right, that's where your returns get lesser and lesser because of time decay. So if you start to see the stock like not moving, just going sideways for like a week or two, I think it's also good to like what Jamie said, just get out, take some profit, right? And then if it were to break through, like for example, maybe I could share my screen, right? If I could share my screen, like for example, let's assume that for Pop Mart, right? It was moving up, right? From like, let's say 100, 120 all the way. And it went to like near 200. And 200, we saw a little bit of a resistance for about 2 weeks. Look at this, right? Came down, up, down, up, down. It was just consolidating below 200. So that could be a point whereby you could take some profit, get out on the warrants, all right? And then if it breaks the 200, that's where you could take a new, right, call warrant position, right, to ride the upside kit, right? Rather than just holding on to the current one all the way, hoping that it will just go higher and higher. But the more you wait, the longer you hold, right? And that's where your returns will get smaller and smaller. Correct, Jamie?
Yes, correct.
Mm-hmm.
Because of time decay. So I just wanted to move on to the last question. You're welcome, Biscuit. Chin Sing, good question as well. And Macquarie is the only warrant market maker providing bid and offer prices in all the warrants that we track, or have, that we have and which we issue. Is it subject to manipulation? Well, I guess what you're really trying to get at, Chin Sing, is that does that mean that we could be unfair in our pricing, right, rather than manipulation? Because we're the market maker. So as you can see from the live matrix tool, warrants don't have a life of their own. We show you the live matrix to show you exactly how the warrants will move, according to the gearing. So I don't think, when you say manipulation, I don't think it's so much saying that we will, the warrants will move all over the place, depending on how we want to quote them, because they are just shown on the line matrix. You can see it's really transparent that way, and it's priced based on the Black-Scholes pricing model, which is the same model that we price options. So basically what I mean is, if you put in the strike of the warrant, you put in these conditions, the exercise, the strike, the expiry, the implied volatility levels, and the interest rate levels, etc., it's going to spit out this price for you, basically. Right. So there is no manipulation that way. But maybe what I think you're trying to allude to is, does that mean that, then, we're the only market maker, we can move prices around during the day, we can go on very wide spreads, etc., right? Chin Sing, I think that's what you're trying to allude to. And if that's what you're trying to ask, well, my simple answer is this. Yes, warrant issuers can do that because they're the market maker, right? They make the prices. They can go on wide spreads. They can obviously move the prices up and down during the day. However, why would we not want to do it? Very simple answer. Because if we do it, then no one's going to trade a warrant, right? Or at least you're going to deem the market maker as unreliable and with no consistency in pricing. And while you trade the warrant, you're going to trade the shares, you're going to trade other leverage instruments instead. And therefore, it is entirely the market maker's interest, absolutely, to quote fair prices, consistent prices on the tightest spreads possible. And for warrants, the tight spreads are typically 0.1 of a cent because they cost less than 20 cents, and the minimum spread, bid and offer spread, is $0.001. So you'll find that most of our warrants, as much as we can, is quoted on that tight spreads, and we show the live matrix transparency, and so you can also have the peace of mind on consistency of prices. We want to do that because we want to keep clients happy. We want them to continue to trade warrants. Well, a warrant market maker or issuer essentially is in the business of trying to sell a warrant to you. Just like as any seller of products out there, they want to sell. And if they want to sell, they need to make sure that customers have a good experience with them. So how do we provide that good experience? We want to make sure that we can offer warrants as cheap as possible. So that means that we want to keep the implied volatility level fair so that the warrant is not too expensive. We want to make sure spreads are tight. We want to make sure that we have got tools like the line matrix to show you in a transparent way how the prices are quoted, and we will stick to how it shows up on the live matrix, and it's the price that you will trade on the screens. Okay, it is absolutely a win-win situation that we're trying to aspire towards, which is why I partner up with people like Joey to offer, trade levels so that you know what the target exit levels are to get out. And I show you via these presentations what the maximum holding period should be, so that you don't end up just buying and holding the warrant for a long time, and in the end you lose money even though your view is correct. So we want to make sure that you have a good trading experience, Chin Sing. And so my answer to your question is, of course, any market maker can misquote or quote according to how they would like it, but is entirely, absolutely, in our own interest as well to make sure we quote the best prices we can for investors so that they have a good trading experience. They have, a good chance at achieving profitability, magnified returns from our warrants based on their target exit levels in the stock.
Thank you so much, Jamie. I think that's a very, very fantastic answer. All right. Yeah. So, guys, it's all transparent. So, basically, you can go to the website. You can see that the spreads are very tight. All right. And Macquarie, as the market maker, would want for you to trade more warrants, one more transaction in warrants. And that's why they want to keep the spreads tight. They want to, so that, instead of buying the underlying, you could buy the warrants. And, so there's no interest for them to make any price spreads very wide and profit from that. There's no reason at all. All right. So just to make sure to let you know this.
But of course, if we then do so, there must be a reason, right? And I won't go into that, in full detail. But if we ever go on very wide spreads, it's because we're trying to tell you. I can't be out there with a mic and with Joey and say, hey, don't trade this one. I can only show it through spreads and liquidity. So one of those ways that we try to tell investors not to trade a warrant is where we really go on quite wide spreads. If the stock was tight. Of course, if the stock was very wide itself, then we will also be wide, because we're tracking, right? Otherwise, if the stock was on tight, on the live matrix, you can see whether it's tight or white, because it assumes that, obviously it shows you if the stock was tight, what would it be? In this case, if you see that it's tight, it is on tight, and it's not a bad warrant to look at. In the interest of time, I think we have to take one last question, and
Okay,
Chin
just
Sing
one
is
last
very
one.
interested. Thank you very much for asking so many questions, but we'll take this final question. Is Macquarie connected to warrant markets in Hong Kong? I also think it's a good question because, of course, we're talking about a Pop Mart share listed in Hong Kong, where we have got warrants in Singapore, so that you don't have to trade in Hong Kong dollars, um, and you trade it in Singapore. But of course, if you wanted to do that, to trade in Hong Kong, then yes, we have warrants in Hong Kong, traded in Hong Kong dollars, Pop Mart warrants traded in Hong Kong, listed on the Hong Kong exchange, but issued by Macquarie warrants in Hong Kong, not Singapore.
Mm.
Okay, and therefore, if you wanted to know more about it, you will then have to find out from the Macquarie Warrants Hong Kong website, rather than Singapore website. So yes, you can, but if you wanted to keep things simple and just trade from the HKEX without also needing to do the conversion into Hong Kong dollars to trade our warrants in Hong Kong dollars, then you can do so via our warrants that are listed on the HKEX and traded in Sing dollars. The prices here you see are in Sing dollars, even though the underlying shares are in Hong Kong dollars.
All right, very good. Thank you so much. I think we have more or less come to the end of today's One Good Trade live show. Let me know, guys, how many of you have got like value. I mean, you learned something about the stock Pop Mart, you learned something about warrants as well. Just type a V, guys, type a V for value. If you have got some value today, all right, on this stock right here called Pop Mart 9992.HK. Let me know. All right, thank you so much. Chin Sing as well. Hi, Ian. Value. Let's see who has got value today. All right, let's see. Thank you so much. Biscuit, I think we asked your question as well. Value, awesome. Alex, value as well. So great to have you guys over here. All right, so we have Jamie join us again maybe in the next One Good Trade live show, and that's where we'll share. Maybe do a quick review of Pop Mart and cover a new stock as well, that you could potentially put in your watch list for even more upside. But right now, as I mentioned, Pop Mart looks pretty strong. In fact, I think we are starting to see a bit of bargain hunting coming back. It went to a low, push up a little bit. It's about 262. Anything near 250 and above, I think it looks pretty bullish still, right? So I hope you guys got value in terms of how you could take, use warrants to potentially magnify your return. So value. Thank you, Chloe, Chi, Alex, awesome. So yep, I think pretty much we have come to the end. Anything to add, Jamie, from your side?
No, so I hope even if you wanted to wait for a while before participating in Pop Mart shares, then today's session was also value adding in that it introduced La Boo Boo and Crybaby to you.
Nothing
If
new.
you have not heard about it, I mean, it is one of the biggest trends right now, globally, not just in Singapore and especially Asia. So hopefully now if you see a Pop Mart store that's popping and bursting with people, then now you can potentially look at a Pop Mart warrant to trade that trend that you're seeing with your own eyes, out in the real world. Now our Pop Mart warrants only listed last month, so it's pretty new. And one of those things I mentioned at the start was we're looking to potentially give away blind boxes for those who don't want to queue up for it. And if you're already trading a Pop Mart warrant and you wanted a chance to get a blind box as well, do look out for that campaign that will hopefully happen sometime this month, if not next. But of course, nothing should stop you from trading Pop Mart warrants, if you see a potential, move towards the target levels that Joey was talking about. Don't wait for the blind box giveaway, because whatever that hopefully you make from the warrant will pay, for as many blind boxes as you want. So good luck, everyone. Good luck with Pop Mart, and as well as HKEX, which Joey has mentioned, potentially has more upside. Hopefully, you can use warrants as one of those ways to magnify your returns and be profitable in this market. Just know you have to look out for your maximum holding period, and so that you are able to manage the risk of trading a warrant. And of course, if your view was wrong, the cut loss levels, you need to abide by them, and it also means that you will be making magnified losses in the warrant if you're wrong, right? But hopefully you are on the right side and you're making magnified positive returns instead.
Okay, very good. Thank you so much, Jamie, for just doing a quick summary of what we've covered. All right, so I hope you guys got value on this stock called Pop Mart today. All right, put in your watch list, check it out, monitor the price. All right, check out the warrant as well. Go to the warrants.com. .sg website as well. All right, find out more than what Jamie has shared as well. Right, so put it in your watch list, and of course, if you go overseas and stuff, check out their Pop Mart stores and you see how crowded it is. All right, and then you might even want to, instead of buying the soft toy and the Labubu, I think you can probably think about considering Pop Mart shares. All right. So guys, I want to share with you a little bit more things as well. So, if you want to get some of those top ideas, so I think we covered on Pop Mart today, of course, HKEX previously, but if you want to get some of those top ideas by WhatsApp, as a client of mine in Philip Securities, check it out. The link is right in the chat. So that's where we actually share some of those ideas by WhatsApp daily for free. All right. Check it out. Link in chat. So if you're not kind of getting any service from your own broker and stuff, check it out. That's what we do, to provide some service to our clients in Philip. All right, Ken. So I think we have come to the end of today's One Good Trade live show. All right. So thank you so much, everyone. Have a good day. Bye-bye. Take care.
Bye.
See you
See
guys
you
in the
next
next
time. I'll
session.
see you on the next show. Bye.
Bye-bye. Bye.